Start the session, sir.
Yeah. Okay. Yeah, let's start. Okay, let's start with introduction. Okay, first let me introduce myself. Okay, so yeah, myself Shiva. So I have around more than 8 years of industry experience. Sorry, can you please all go on mute? Yeah. Okay. Okay, so I have around more than 8 years of industry experience and having 6+ into Guidewire. Okay, so I have plenty of experience in insurance industry. Okay, so I actually worked with multiple clients, mostly into property and casualty insurance. So we have plenty of types of insurance, but the specific the Guidewire tool is related to only property and casualty insurance. This is specialized tool. Okay, yeah, this is about myself. I hope I can give more knowledge and Guidewire and insurance perspective. Okay, so can you also please introduce yourself? Can we go with Mansoor? Hi, Mansoor. Hello.
Hey, hi Shiva. Hi team. Yeah, my name is Mansoor. I'm from Anantapur, Andhra Pradesh. So currently I'm working on Guidewire Insurance now. So with my so I got this referral from my friend to join the session. So glad to see you all.
Yeah. Thanks, Mansoor. Hi, Mahesh.
Hi Siva. Hi Siva. This is Mahesh. Present I'm working on. I'm new to Guideware. I'm BA to like ClickSense. I am working present in through Wipro. I want to change my skill set like technology to Guideware.
Okay. Currently, you are working as a developer only, correct?
Yeah, developer and ClickSense side like a BI tool, like Power BI, ClickSense, ClickQ.
Okay. So, do you have any basic knowledge of insurance?
Basic knowledge of insurance means yeah, outside.
Yeah, outside market. Yeah,
Yeah.
that should be sufficient. Okay. Thank you, Mahesh. Hi, Nishita.
Hello.
Yeah, please go ahead.
Yeah, do you want me to introduce myself? I just joined the meeting.
Just a basic introduction.
Yeah. I'm Nishita, and my background is MBA Finance. After that, I have worked as appraisal analyst in property valuations.
Okay, thanks, Nishita. Hi, Naveen. Hello, Naveen, are you there? Okay, so I'll come back to you. Naveen Chowdhury, can you go ahead?
Sure. Good morning. Good morning to all. I'm having total 5 years of experience into IT, into different domains like ServiceNow, Java, and cyber security. So currently, I'm looking to upgrade my skills. So I'm looking for Guidewire also now.
Okay, so do you have? I can expect. Do you have some basic knowledge of insurance, right?
Yeah.
Okay.
Before IT, I used to work in IC, like insurance sector only.
Okay, Naveen. Thank you. Hi, Pawan.
Yeah, hi Shiva. I'm Pawan. I'm Pawan Kumar.
Yeah.
I'm a fresher. I don't know insurance.
Okay, Pawan. Thank you so much. Hi, Prudvi.
Hi Shiva, good morning.
Good morning.
So I'm Prithviraj and I have around 4 years of experience in the IT industry. I worked as a developer and presently I'm working as a business analyst. So I'm new to Guidewire actually.
Sorry, currently working as a
business analyst.
Business analyst in which domain?
Like CRM actually.
Okay.
Yeah.
Okay, so hope I could. Hi, Naveen, are you there?
Hi.
Hi, Naveen. Yeah, go ahead.
Yeah. Actually, I'm into the IT industry, like software engineer right now. I'm into the DevOps tool. I'm looking for the Guidewire developer.
Okay, so you are currently working in means DevOps side, right?
Yes, yes.
Okay. Okay, Naveen. Yeah, thank you. So why I am so just I want to know, right? So I want to set the context. So I need to means go with the basics. If because majority of the people don't know the insurance, correct? So because if we know the insurance, then only so we can easily understand the tool. So basically, Guidewire is a like semi-finished. So it's already built. Everything is built for the basic necessities. So if we use the tool, so we can even establish one company without any knowledge. So we can do our business because Guidewire provides everything inbuilt. So only as per the customer requirements, based on customer requirements, we will customize the tool, right? Just try to understand because the for everything is basic is very important. Okay, so before going to actual jump into the Guidewire, so we will also actually, so I lost my throat because of the winter season. Okay, just please try to okay, cooperate with me. Okay. Okay, so before go really jump into the Guidewire, actual Guidewire so knowledge, so just we need to know so how insurance industry works. Okay, so why Guidewire is required here, right? So Guidewire, so if you know, the Guidewire is also particularly for only for what is that property and casualty insurance. We have different types of insurance variants in the market, but that doesn't supported by the Guideware, right? So we will only talk about the property and casualty insurance here. So just I want to set the context before, because you might expect that so everything will be covered, because I can't cover because the Guidewire only uh, the the implementation specific to property and casualty insurance. Okay, so here, so what is property and casualty insurance? Okay, so suppose you have a car or you have a building. Okay, so you are the owner, so you need some. So in US, I can simply say in US how the insurance will be. So if someone invited you, okay, to his house or her house, so you just fell down on the floor, you can sue him. Okay, in that case, the host should have the insurance. Otherwise, he has to pay the money, right? So you will go to the court because of this. I fell down on his floor. He's not what is that? He's not. He's a reckless like that. So we can sue him. So court may give something like right. So he has to pay something. There is a judgment. So here, if he doesn't have the insurance, he has to pay from his pocket. So right, so see here in India, so we do not see like that. So we there is everywhere like mutual understanding, right? So generally we see. Okay, so but in US nothing like that. So everything, so we should be very careful. That is why the industry, so Guidewire industry is vast from the United States as well as from Canada, right? So the we get more clients. Okay, we get more work from there on it. Okay, so when you try to like when you land into the Guidewire projects, in future, then so you mostly work for US or Canadian clients because the industry is vast there. Okay, so this is about like Guidewire and the insurance industry. So particularly, so what is insurance here? Okay, so can anyone explain in simple terms what is a insurance in basic terms? Can anyone know?
The amount we are going to pay whenever a loss occurred or something accident happened to a vehicle, anything.
So somewhat it is correct. So can anyone say anything more than this? Okay, so I'll explain. So Mansoor is correct, but so here, so what is the benefit out of it? So we are paying, we are losing our money. What is the benefit, right? So the benefit is we are getting the what is that protection, right? We are getting the protection from the unexpected events, right? So we do not know what will happen, when will happen, right? So what about our family? So if we are the what is that only the person who is earning for the family, correct? So if something will happen, some damage will happen to our body or something, we will, so we are hospitalized. So how the family will survive, right? So for that, so we will go for unexpected events, we will go for the insurance, right? This is the term. So right, so insurance is we are paying the premium to whom? So there are two parties involved here, correct? So one is insurer. These terms are very, very important. When someone
Are you sharing
interviewed
the
you,
screen? I'm
so,
sorry. Are you sharing the screen?
yeah, so let me share my screen also. Okay, so just give me a minute, I'll share it. Okay, so I'm setting the context first. Okay. Okay, so here where I am. Okay, so here two parties are there. Okay, let me share my screen. Otherwise, so that would be good. Okay. Hope you can see my screen, right?
Yes, yes, Siva, we
Yes.
can.
Yeah. Okay. So basically, so what Mansoor is said is correct. So we are paying premium, right? Out of that, we are getting the protection. Okay, right. So whom we should pay? There are two parties. Actually, insurance is not only a protection, it's a contract. It's a contract between the two parties. So what are these two parties here? Okay, so one is insurer, one more is insured. Okay, insurer is nothing but a insurance company, right? Insured is who is going to take the policy. Okay, this is moreover like ClaimCenter training, but for claim, policy is the base. Without policy, we cannot go for a claim. That you should remember. Okay. Okay, so see, this is the one. So insurance is a protection against financial loss arising on the happening of an unexpected event, right? So we discussed, right? So there is any unexpected event, there might be a financial loss, right? So because to recover from that loss, we will go with the insurance. Okay, so here insurer and insured. Okay, so insurer always collect the premium to provide the protection. The insured who pay premium and get protection against the unexpected event. So now understood, right? So do you have any questions here? So what is, who is insurer, who is insured? Hope no, right? Okay. Yeah. Can someone saying something? Okay. Okay. So here, so how the insurance? So now we know that insured, right? Insured is getting benefit by paying the premium. So how insurance company is benefiting from the from these premiums? Okay. So we'll understand that one. So basically 10, so this is we are means talking about the, we are saying this is the unexpected event, correct? So unexpected events do not occur regularly, daily. That is unexpected means unexpected, right? So because of this unexpected events, suppose there are 10 people take the insurance, correct? So 10 people means 10 premiums insurer got. There may be not all 10 will be injured, not all 10 people will what is that get the unexpected events, maybe one or two. The other 8 premiums is a benefit of insurer, right? That is why insurer try to like establish the insurance company. Okay, so we never do the business or anything without profit, right? So that is a profit insurer gets. So we have different types of insurance variants, right, in the industry. So we know more, so in general we know basically life insurance from our grandfathers, fathers. So everyone has basically life insurance, right? So this is one type of insurance. So if there is a death happened, this life means life end, then only so you will get the amount. So here the premium is more, the whatever you are getting is very less. That is why nowadays no one is prefer to go with the life insurance. That's why one more product came into market, that is a term insurance, correct? So the term insurance, so this is a like there are conditions, like so if you what is that, live till 65 years age or 85 years age, so you can get this much amount of money, otherwise you won't get, you do not get anything. This is the term insurance. Why so everyone is going for term insurance? Because the premium is very less, right? That is why we go with the term insurance. So we have different types of, so we need to talk about the property and casualty insurance here. Now the property, so you may have property, right? House, you may have what is that, vehicle, right? So for this there might be a theft, there might be a fire, there might be a wind, there might be something, there might be a robbery, so right? So there is a risk for even the not movable property like house, so we may get some risk, right? So that is why we will go with the property insurance. See here, auto insurance, like vehicle. So if we have vehicle, so we may get collision, right? So that might be robbed by someone, right? So that's why, so we will go with the what is that, auto insurance. In auto insurance, sometimes you also might get injured, right? So in that case there is a different types of coverages we have, right? So coverages means, so what which perspective we need to cover our loss. So the collision means, collision covers only if in case of your vehicle is damaged. But if you damage, there is a medical injury coverage, that is a different coverage. So for every insurance company the terms are different. So we are talking about in general. Okay, there might be for insurance to insurance the coverage name might be different. Somewhere it is collision, somewhere it might be something. Okay. like that. So we have different type of coverage. For coverage also we have some amount. Up to this amount only insurance company will cover. So we can opt. So up to, I need coverage up to $100,000. So if I want to be covered up to $100,000, the premium is this. If I want to be covered for $1 million, the premium is different. So this is the industry. These are called regulations. So regulations comes from the different like government body. Okay, so there are some more like organizations, ISO, Insurance Service Office in US. There are some regulations. Beyond these regulations, if insurance company collects premiums are charging more from the insured, then so government will block that company, so that will be closed. So that's why insurance companies will also be run in the like in terms of the regulations. Okay, so beyond regulation they won't go. Okay, so next, see, so we may have these types of risks. That is why we will go for the insurance. So we have already discussed what is personal risk. So this is the threat from some kind of loss to you. So there might be a threat. So from others. So there might be a even like how can I? So we may in future so unemployed. So for that also we can go. So like insurance. So they may give monthly recurring amounts. They will pay monthly. So there are different types of plans in insurance. Okay, so here, so we discussed about property. Property is two different type, like auto and homeowners, right? So we'll call it as homeowners for home, auto is for vehicle. So what is liability here? Okay, so I already set an example that, so someone, sorry, is anyone having any doubts?
No, sir.
Okay, okay, so liability. So here liability, what is liability? So I set an example, right? So when someone invited you to his home, you slept there, then so he is liable for your loss. Something got damaged in your body, then who is responsible? Who invited you? He should be very careful before inviting someone. See, that is what they are saying. See, is a risk you pose to others. So I have to take a liability risk. See, I am invited. So right, so I invited someone to my home, right? I should have that insurance. So because I will have that liability risk always, right? I should be careful. You might hit someone with your car. So I hit someone with my car. That means if I do not have liability insurance, then I cannot cover that loss from insurance company cannot cover. So I have to pay from my pocket. See, this is very funny. Your dog might bite someone. Okay, so that is also a risk. So that is why, so we need to have all types of what is that, coverages. So even though we go with one policy, we need to have all these coverages into that. So sometimes you may in real time, so you may get the what, not only homeowners policy, not only like personal auto policy, commercial auto policy, not like this. We may have package policy. Package means so it will cover your property as well as your vehicle. Okay, if you have company like so like Ola, so you need to cover all your vehicles. That comes under commercial auto. So you have to cover your all vehicles at once in one policy. So that way, so we so the Guidewire built, like insurance industry builds majorly. So Guidewire implemented all these in one place for basic needs. Only when it comes customized based on the client needs. Okay, so there is a property risk. We already discussed, if we have any property, so we need a protection from theft or damage. So if your house burns in a fire, your insurance should cover not just damage done directly by the fire, but indirect costs as well. So what are these indirect costs? So your home burns in fire, you cannot stay there, so you have to rent some other house. For that rents also, if you have insurance, insurance company will pay. That is the indirect loss, not a direct loss. Okay, you do not have a car, so so while going to your office or while coming from the office, that is damaged in the collision. So after repair only you can use. Right, until that you need to car for daily traveling. For that also you should have the insurance. Then what is that, expenses will be covered by your insurance policy. This is one other type of insurance we have, right? So that is called package policy, as I said. Okay, so now, so we have discussed about types of risk. So we also discussed the type of insurance, right? So these are coming under the property insurance. Okay, so there is auto insurance, which covers your vehicle, right? So home insurance, which covers your property, home or something, right? Renters insurance, so this covers the so whatever, so we will give our house for the rent. For renter, something happens because of your house, you are liable. For that also you need to have the renters insurance. Okay, see, renters insurance also includes liability for people injured in your home, like homeowners insurance. Correct. So umbrella insurance. What is this umbrella insurance? Like, so the umbrella, so the what is saying, right? So umbrella covers us, right, from rain, right? So umbrella generally it is a what more in width. So we can also, that can be cover some one other person also. So say in the same way, okay, the umbrella cover is some extension to your existing policy. Suppose your policy covers only $1,000, there is a loss happened more than $1,000. If you have this insurance, you will go, I mean, that in that an umbrella insurance policy will cover another so the excess amount. That is what umbrella insurance. There is a example, right? An auto policy might cover $300,000 in liability, but if the driver gets sued for 1 million, then umbrella insurance would pay the extra $700,000. That is what. So if there is an excess liability, excess loss need to be covered, that would be covered as part of the umbrella insurance. You can, so you can get a doubt, so why don't I go for the coverage of 100 millions in the same policy, right? So in such case you need to pay the more premiums. That is why umbrella is one more variant. There separate policy, it's like a top up on to your policy. You do not need to pay the premium equal to 1 million. So this premium is very less because you are already a customer to that insurance company. They are giving some more advantage. That is why they charge very less premium for another top of. That is only the benefit you will get out of the umbrella insurance. Okay. Okay. Now the health insurance. So this will not come under our what is that property casualty, But so maybe so because of your car damage or you get some medical injury, so some health insurance occurs, we may have coverages for that. So we will add as of our policy, that is a supplemental insurance. Supplemental insurance means, so it's already the coverage, whatever premium, whatever the loss claim amount already been settled by the insurance company, so claim is closed. But so you are getting the health issues because of that damage, right? So for that, the supplemental insurance will pay, right, regularly, weekly medical bills or monthly medical bills whenever you go for the treatment. So all those things will be covered, like hospital bills, right? So that will be covered as part of the supplemental insurance. Critical illness insurance, right? Critical illness, so the what is saying, so if you have critical illness like so cancer or something, right, heart strokes, so in such case, so you need some money, right, for that. So for this unexpected event, so you first will go for the insurance. So after that, some days, some years after, so you may get some illness, right? So for that, so this insurance will cover disability, right? Disability, so we know, so we disabled, so we are alive but disabled. So in that case, we cannot do our daily activities. We cannot go with go to office and do our daily activities, our job. In that case, so we lost income. In such case, so they pay monthly some amount of money. That is covers under disability insurance. We already discussed long term care insurance. Sorry, we have discussed term insurance, right? Long term care insurance. So this is like what is that? So is there? So we are not able to. So we are like paralyzed. So long term care is required to our body. Correct. In such case, so this insurance will cover dental insurance. So we know. So we do not need to talk about that. Right. So now life insurance. So here life insurance is with two types of insurance: term life insurance and whole life insurance. We already discussed about term life insurance. Okay, so term life insurance covers in event of death, okay, during the covered term of the policy, right? So if you yeah, Manasa.
So are we going to the Guidewire doesn't support life insurance and health insurance, right? Are we I'm sorry, I missed the beginning of the part. So are we just learning what kind of insurances and everything?
Yeah,
or,
yeah. So what
okay.
kind of insurance? I already told, like our Guidewire only support property and casualty, right? So property means, so so suppose our home, right? Home need to be covered. So Guidewire covers. And what is that? Our vehicle needs to be covered in that. So just I am saying, so how the market will work. So what is the importance of property and casualty? Why Guidewire came into picture here? Okay. Got it, Manasa?
Yeah.
Okay, thank you. Okay, so we will go for some extent. So I want this policy up to 65 years, up to 85 years only, right? So the term insurance basically built like that only. That variant is like that. So if before 65, if I die, right, then so my what is that? My family will get a benefit. But here a term in term life insurance, so the what is that? The return, the benefit is more, the premium is very less. Whole life insurance, this is a this we know, this is the legacy insurance. So everybody knows in our family. Just so if we die, then so we will get that one, right? So other kinds of insurance: travel insurance, pet insurance, credit insurance. this travel insurance. So when we are traveling, so we get illness. So in that case, we can get the what is that medication. So in some other country or somewhere, right? So in approved hospitals, we can get that one. Pet insurance cover veterinary bills. So if our pets got injured with some accident or illness, that will be covered under pet insurance. Okay. So credit insurance. This is like a credit card bills. If we are unable to pay in such case, so they will recover from that. So if we have insurance. Right. So ID theft insurance, this is very important. Like, so if someone wanted to sue, like, so we have some name, very good name in society. Someone wants to destroy that because of some false, what is that? So false, what is that? So false sayings or like that, right? So we can sue him. So that is a very like costly insurance. Okay, so the fame we cannot recover, right? So rental car insurance, in sometimes we rent out the car, right? We take the rent of the car, right? So in such case, if that will be damaged, so that should be borne by us. So because before going for renting, so we should get the type of insurance. The workers compensation insurance, this is more clearly, this is very commercial. So only the big factories for their employees, they'll take for medical benefits or some loss, right? So for there, so this is a state regulation. First thing is, so if you want to establish any factory or anything, we should show the proof to the government that so all my employees have, even in IT industry also. So first thing, the primary, the employee should have the insurance, correct? By default, employee has the insurance. So if he doesn't cover, then so there is no employment. So this is overall the insurance. So I'll also explain some basics about the business. Okay. So let me explain. Let me open one notepad. Okay. Okay. So you may get questions. Okay. Indemnity. So what is indemnity? Okay. And so here the claim, right? And exposure. So these are the terms in ClaimCenter. Okay. So indemnity here. So indemnity is nothing but okay. So why we will go for the insurance? So to get the protection from the loss, something unexpected event, some loss is going to be happen. So that is why we are going for the insurance. The indemnity means to restore the victim of a loss to the same position as before the loss occurred, right? So our car is new car. So while traveling, it is damaged. To restore that car to the new position, suppose I'll tell you like this. So our car is 100% damaged. So we cannot travel in anymore, but it has insurance. Insurer will has to pay for the new car. We are going to buy the same variant of car. So insurance company should pay the total car amount. That means we are recovered from the loss. Okay. As before the loss occurred. Just try to understand how before the loss, how we are in the same position after the loss also, because insurance company paid us. But so what is indemnity here? So indemnity is nothing but, so we will not even one penny also benefited. So we paid For the car 8 lakhs, insurance company will pay only 8 lakhs, not more than that. Or so the whatever the new car, so it is only 1 day old, so it will pay the total amount, because maybe so today the car price is 8 lakhs, tomorrow the car price is 8 lakh 50,000. So why should I pay? I have insurance, why should I pay so for 1 day 50,000 extra to buy a new car? Because anyway insurance company will cover 8 lakhs. Okay, so for that, like, so we can also, there are in industry there might be false claims, even there is no damage, generally that is intentional damage, so we can do to our car, we can go for the claim. That way we will be benefited. That is why the indemnity word came into picture. Indemnity is to recover from the loss, but we are not going to be benefited. That is very, very important in claim industry. Okay, so here claim. So what is the claim? So it's like a one policy document. Okay, so how when we go for a policy, okay, so insurance company will give one document as a proof that you are a policy holder of our insurance company. You paid this much premium, you are going to get this much coverage under these conditions. Like that we have policy document like that. So we have the claim document as well. That is nothing but a claim, that is a contract, so that will be between the two parties, that will be given. Okay, so the claim claim contains exposures, claim contains incident. So first thing is how claim will be started, right? So there is a sudden damage happened. Now I am going to call my insurance company. Initially some claim representative will pick up the call and get the details, when it has happened, what is the last date, when so what is happened, so how much injury, all those things will be collected by the claim representative, right? So the claim representative will start the claim actual process. Now we are landing into the Guidewire. So in the Guidewire, so a claim representative will start one new claim. How he will start? First, he should know your policy details, right? So there is a collision happened. If you do not have collision coverage on your policy, how can claim? So how can you claim for that? If you have coverage, then only you can claim for that. That is why he needs the policy details. He will find that policy, he will retrieve the policy. Okay, then so he will get to know what are all the coverages you have. You are saying that car damage, some collision happened before, means from the another driver, right? So if you do not have collision coverage, so he will definitely say that you need to pay from your pocket, so you do not have that coverage, this claim is invalid. Okay, so that is why, so always here policy is required for claim. Without policy, claim doesn't at all exist. Okay, now exposure. What is this exposure? Exposure is nothing but we discussed. This is about like a coverage. Okay. Okay. So the measure. Okay. So exposure is used as a measure of the rating units or the premium base of a risk. So that means what is this? So exposure always tied to the coverage. So how coverage will come? From policy. Right? So from policy, we will get the coverage. That coverage is tied to exposure. So here exposure means exposure always tied to a one claimant. Claimant is nothing but who injured or the party is going to get indemnify from the claim. That means again I am stressing out on the this indemnity only to recover from the previous position, previous situation, not benefit. Okay, so who is injured or the party is going to get indemnify from claim. So now the injured party are injured party. Okay, so injured party is having the policy first, should have the policy. He has some coverage, right? Coverage of something $1,000. Okay, so the loss happened more than $1,000. Even the insurance company will pay only $1,000 because he has the limit of $1,000 only. He is paying the premium for $1,000 only. Okay, even though there is more loss, insurance company never pay. So whatever damage has happened, so you should uh, pay out of your pocket, means more if it is a damage more than the 1,000. So that is why, see, for this $1,000 or $100, no one go for a policy, right? So if the risk is more, then only we will go for the policy. That is why there is a one more word came into picture. This is a deductible. Sorry, deductible. Okay, so when you go for a policy, you should say, or you should opt, actually this is for your benefit only, you should opt for some deductible amount. Let's say my deductible is 1,000. That means up to $1,000, because if deductible is more, premium is less. Okay, always premium and deductible are tight coupled. Okay, so deductible is more, premium is less. You need to pay initially when you go for taking the policy. Okay, so now so there is a damage up to $1,000. You already align that, like you already agreed to that. So I should have the deductible of $1,000 in my policy. That means, what is deductible means? So whatever the amount, so you have opted for that deductible amount, you need to pay out of your pocket. That will not be covered from your what is that, insurance policy. So why? Because your premium will be less, but you can cover the policy coverage, you can up to $100,000. Okay, you can go up to $100,000. So $1,000 is very less damage for you, you can pay. That is why you opted for the 1,000 deductible, right? So more than $1,000, whatever the amount, more than $1,000 and less than or equal to 100,000. So in this range, if there is a loss, then insurance company will pay. That means 1,000 is not at all what is that, more to you, right? So it's very less amount. So you are benefited from that. If deductible is more, premium is less, right? That is a exposure, right? So we have some other terms. Indemnity we have what is that explained, right? So some words I am getting, one second. Okay, now one more word is legal. Okay, so this is very common. Okay, so in India we see, right? In India or everywhere, okay, there might be a dispute, right? So someone hit your car, or you hit someone's car. The person is very aggressive, or I am very aggressive. I will go and hit that person first, right? before never, so before thinking 1 minute also, so I will go and hit that person. So in such case, he can sue you because insurance company will pay, so everything is legal, that collision, but this is illegal. In such case, in certain cases, the other person can sue you, can go, can what is that, so he will appoint one lawyer or someone, so the court cases will also be happened because the dispute is more, not even collision, this is illegal, right? So in such case, so there is a, so we are talking about legal, but so matter, so this will be called as a matter. Okay, so this is lies on the claim, so we will create a matter. So matter has one lawyer, attorney, we will call as attorney in insurance world. Attorney for us, one attorney will be there, for other person also one more attorney will be there, so we will go to court, so the dispute will be resolved. So for these cases, so we may bond some amount of money, so we need to pay that to the lawyer, we need to pay to some expenses, we are frequently going to the court, right? So that expenses everything, so we can also cover as part of our policy, we can claim for those things as well, right? So these things will also be covered as part of the claim, right? So subrogation, there is a subrogation, there is a salvage. Basically, if we go with the 3 years, 4 years of experience on Guidewire, the basics things that will be asked, all these things, what is claim, what is policy, what is exposure, deductible, so everything, so we should explain. So here the subrogation mainly, so we have discussed about liability, right? So if liability, so in liability case, we are liable, the policy holder, I am liable, so I have to pay, so if I what is that, hit someone's car, I have to pay because I am liable for that collision. But so the third party, so some other party, so here we need to discuss about first party, second party, third party. First party always insurance company, second party always so us, like what is that, so insured, and third party always the other party, so that is external to our policy. Okay, so in liability case, we are liable. In subrogation case, the third party is liable for the damage. In such case, okay, in such case, so our car damaged because of some other person, some other driver. So now I have an insurance for my car. Insurance company will pay me, but this is not my fault. Okay, in my insurance company will go to the other person's insurance company if he has insurance. So the insurance company, my insurance company will go and collect that money. We do not bother about that, but insurance company create one subrogation on the claim, and it will be settled by the insurance company. Okay, so that will be, the amount will be collected from the third party, right? So we will be paid on the initial day itself. That is not our fault, it will be confirmed in the investigation, so that will be confirmed, so we will be paid. So later on, so after we already indemnified, then our insurance company will go to that other company, and so will settle all the costs. Okay, salvage. So what is salvage here? Salvage is nothing but So it might be our fault, it might be third party fault. In third party fault, both subrogation salvage both will exist on the claim. Okay, a salvage means our car is totally 100% damaged. In such case, so we are not able to, that will not be recovered. In such case, insurance company will pay us the total amount, the car amount, total amount. But so the salvage is nothing but one right we are giving to the insurance company, because insurance company already paid the money, correct? So we are giving that, we are saying that, okay, take the damaged car. So this is not at all useful for me. Then so insurance will company will take that car, and so it will sell for the scrap. It may be sell the individual parts and something, some money, some amount of money, so it will get, right, insurance company will get. So that's why insurance company somehow benefited, because it's already given our money back, right? So that is the right should be given to the insurance company. Okay, that is nothing but the salvage. Okay, so do you have any questions till now? Please let me know. Okay, is that
Shiva?
yeah, please.
Yeah. So, can you again explain about exposure once?
Exposure. Okay.
Yeah.
Okay. Okay, so exposure always, okay, exposure is nothing but this is the tracking mechanism in ClaimCenter. Okay, so through the exposure only we will create a payment, because insurance company is giving money, right, for our claim, settling the claim. That means we are getting some amount of money. So that will be, so here if you see the exposure, always I said, right, exposure always tied to coverage and tied to claimant. Okay, exposure, so coverage, claimant, okay, and incident, suppose. Now, so the coverage means we will say, we will give that one example, we'll go with the example, collision and claimant, so myself. Okay, incident is something damaged, some what is that, car front part is damaged, front part damaged. The incident always talking about what is damaged. Okay, what is the loss. Okay, so now how the insurance company will pay? Insurance company will create a payment or check. So we will go, we will come to that check with the amount of something $1,000, right, $100 we'll say, to whom? Myself. So myself, I am already part of exposure, because exposure contains coverage, claimant, and incident, right? So I can create a payment to exposure directly. Exposure has coverage, claimant, incident. So for this $100 paid for this coverage to this claimant against this incident. That is what the exposure. Exposure is always a combination of coverage, what is going to be covered, against whom, against which incident. This is the combination. Okay, that is why to track the payment. So I can create, this is the exposure, I can create multiple exposures on the claim. Okay, I paid, again I create one more check with $200 to one more exposure. This exposure too contains different coverage. There might be, it's not a collision, it might be a comprehensive, it might be a theft coverage, right? The claimant is different. If I am liable, I hit someone cars, claimant is different, right? So that way we can track the payments and everything. So if we actually come to the what is that Guidewire studio part. So we'll get to know all these things very clearly. Okay, this is what I'm trying to say. So you got it, I think so.
Yeah, sure. Okay.
Yeah. So do you have any questions? Any other questions? Please let me know now. No? Okay. Okay. Hope you got it till this, right? So we, okay. What is that? No, from my side. Okay. Thank you. Okay. So we can wrap up this session, today. Okay. We'll connect tomorrow. Okay. So tomorrow, I will so explain some more other words. Okay, so because see, this might be a boring session, so I am directly jumping into the Guideware because the basics are very, very important. So if I directly jump into the Guideware, if I create a matter, if I create exposure, if I create a subrogation, you do not know. So what is this? Why we are creating? So what is tied to exposures? What is mapping? So nothing, so you cannot get anything. That is why, so I am trying to explain clearly the basics. So we will go, before jumping into the Guidewire, we have to know about what is entity, what is extension, what is type list, what is PCF, what is UI structure, UI architecture. All these things are there. Without understanding these basics, you cannot even create one widget. You do not know what is widget also. Okay, so there are atomic widgets, primary containers, secondary containers. Okay, so these are all the things are there. Okay, try to understand. This might be for some days, this might be a boring session, but just cooperate with me, you will get best out of it. Okay. Okay, so got it. Yeah, thank you. Thank
Okay,
you.
Shiva, quick
Yeah.
question, Shiva. I think I understand, like, you are going to explain the terminology, that way it will be easy for to understand Guideware Claim Center. So are you going to cover what extent you are going to cover in Claim Center? I missed the first 10 minutes. That's why I'm asking again.
You might get the invitation, right, in the group, right? So what are all the topics we are going to be covered? Did you get that?
Okay. No, I didn't get
Okay.
that. I got the invitation, but the content not yet shared, what it's going to cover in the Claim Center.
Okay. So yeah, I will share the content. Okay, so I'll prepare one sheet, okay, one document with that. I'll share the content tomorrow. Okay. Okay. So yeah.
One more question, Siva. Can you share this video? I think you have recorded this video.
Yeah, it is recorded, right? Yeah, I'll check with Lokesh and I'll share it. Okay, definitely.
Sure.
Okay. Yeah. Thank you so much. Thank you, everyone. Thanks for cooperation. Bye.
Yeah, thank you so much.
Thank you.
Bye.
Yeah, bye. Bye, Mansoor. Bye.
Bye. Thank you.
Okay. Thank you, Shiva.
Thank you, everyone. Thank you, Prithvi.